Right, we're good to go. I'm getting the thumbs up from the back. Good afternoon, everyone. My thanks to the conference organisers today for letting us chair this session. This session is titled Sharing Risk Between the Public and Private Sectors to Deliver Investment. But the subtext of that is, and I'm going to read it out just for those of you who might be in the wrong session here, is defining and expanding on the roles of the public and private sectors in delivering the technology solutions required for renewable technologies, gosh, it's a long sentence, to scale up, whilst mitigating the risk via test, demonstration and deployment at a relevant scale. Within this, the roles of financiers, manufacturers and test facilities will be explored to identify opportunities and challenges for taking the sector forward to scale deployment at acceptable costs. I'm Adrian Fox. I'm with the Crown Estate. I'm the Programme Manager for Technology and Supply Chain. My interest, therefore, is around offshore wind, wave and tidal, carbon capture and storage, and potentially marine biomass in the future. I have a distinguished panel here and a distinguished audience. Given that no one's gone out, you're all in the right session, that's always a good start. If I could just ask each of the panellists to introduce themselves so that you all could put a name to a face.
Hello, I'm Giles Dixon from Alstom.
I'm Andy Caird, Director of the Edinburgh Centre for Carbon Innovation.
Ian Todd, Aberdeen Renewable Energy Group.
Chris Parcell from Sker Energy.
I'm Angus McCrone from Bloomberg New Energy Finance.
And for those sharp among you, you'll notice that Angus has manfully stood in. The original person in your brochures was Horace van der Geest, who unfortunately was called away on business. So Angus has manfully agreed to step in, so that's very good. While I fiddle with this, what we'd like to do is we'd like to sort of start off with a general question, and then after each general question, if I can just ask if there are any sort of follow-on questions from the audience, rather than have a general chit-chat and then you ask questions at the end, and we'll see how that goes. So my first question is, for each of you, is what your principal two challenges are to R&D and then that stage of going on to test and demonstration. Leaving aside the issue of risk, what are the real challenges here for our industries, for our renewable industries, from our low-carbon industries?
You're looking to me first, I'm so sorry.
Well, we'll go that way.
Can I just say a few words about Alstom? Some of you may be familiar with us, others less so. We've been helping to decarbonise the Scottish economy for many decades now. In 1966, we built the world's first ever pump storage facility at Cruachan Dam in Argyll and Bute, and it's still operating today, 440 megawatts capacity, and can provide electricity to the grid at times of peak demand at 2 minutes notice, and is a major success story. Next month, the extension of the wind farm at Whiteley will be open, 75 new Alstom wind turbines, making it the UK's largest onshore wind farm, and we're proud to be making that contribution towards the decarbonisation of energy in this country. Of course, it needs government support. We're involved at the R&D end in Scotland as well. We're partners of AWS, the wave energy technology company, and with them we'll be testing the 1.5 megawatt device next year, working towards a full-scale demonstration project in 2014. What are the challenges? We cannot do this on our own. As industry, we need to have government support. And that is from the pure R&D stage through to applied R&D, through to testing, pilot, and then demonstration. And the key point is this, that as we go down that innovation chain, the costs get greater every step you take, and therefore the level of government support that is needed increases. And when you get to the large-scale demonstration projects, you need very sizable amounts of, ideally, grant funding from governments. And we think that's a widely accepted point. If you look at the European Union's programmes, the Economic Recovery Plan, the NER 300, if you look at the DOE programmes in the US, there's a general recognition that grant funding is needed. There has to be this sharing of the financial risk. Of course, in the current fiscal environment, that is a challenge. Often governments say, well, why don't you look at loan finance rather than grant funding? Fine. But when it's loan finance, then there's another element of risk that needs to be shared, which is the technology risk. because you'll tend to find that technology companies like my own will be reluctant to take on 100% of the technology risk of a first-of-its-kind full-scale demonstration project. There has to be some sharing there, not only the financial but also the technology risk with the financiers involved. My final point would be this. There's a lot of people who have some very good ideas on innovative financing instruments. There's a lot of people with good ideas on grant funding. And then there's a lot of people who understand the CO2 pricing space. And finally, a lot of people who understand certificate schemes, feed-in tariff schemes. Actually, there are very few people out there in government circles who bring all of those four funding and financing elements together. And often when you're doing a large-scale demonstration project in particular, you need to bring them together because they will all play a role in trying to assess the net present value of a large-scale demonstration project. And you've got to get that NPV table through your investment committee in a company like my own or in any of our customers, the utilities that are doing the projects with us before the project can actually happen. So all four elements need to be brought together, and I think we need a bit more creativity and imagination in policy circles and in financial circles also about how those four elements can be made to mesh.
John?
Okay, I mean, I've enjoyed the last couple of days, but I think of the three messages that have come out of it. One has been around technology innovation, another's been about regulatory certainty, and the other's been about access to finance. And the bit that, to me, has been missing is actually about people. And at the heart of, if you're going to try and scale technologies, you have to have people in there somewhere, whether it's people with a big P, as in the politics, which sets the vision, sets the agreement between risk and reward, or you're talking about the small p, society. They're absolutely critical. Let me just give you an example of that. We've just been through a whole CCS process where the UK government was said, we will underwrite to 1 billion a new CCS plant. Yeah? That would have paid for the capital infrastructure for the plant at Longannet. Then they said, but we're not prepared to underwrite the costs of that plant running for the next 10 or 15 years. Yeah? That has to be a private issue. So they'd accept a 1 billion cost, they wouldn't accept a 3 billion cost. Yeah? Now, if you've got 25 million households in the UK, what they're saying is we don't mind paying £40 a household to develop the whole CCS, the supply chain, the understanding about it, but we object to paying £120 a household, spread over 10 years or wherever. So there's a very clear statement about what they're prepared to pay and what they're not prepared to pay. But if we come back down a couple of layers, down to the societal bit of how do you develop and scale technology, yes, you need a political vision, and we've got that, certainly here in Scotland, not so much in Westminster. You need the financing. We've heard a lot about that over the last couple of days. You actually also very much have to have the accounting metrics to understand how we value things. Issues like, on the offshore wind, we're talking a lot about technology risk. We haven't really got into things like environmental issues that are going to come up when consenting comes through. And how that's going to affect the valuation of these and the extent to which you can scale in these spaces. We need to think a lot more about regulatory alignment. And again, that's not so much at a very large scale. That's actually about making sure that planning at local authority reflects national authority or national government guidelines. So, and then if you go even further down, you need the whole skills agenda attached. You need to have a whole framework which allows clusters of companies to operate within public sector and the private sector to come together and develop and scale these issues. Again, if you're looking at onshore wind, there are dozens of good sites for onshore wind in this country. But actually, if you start to look at the kickback that we're seeing from communities saying we don't want yet another big wind farm dropped in nearby, there's a real issue. So until we start to integrate not just the technology innovation and the financing, but actually we start to integrate it much, much more with the people aspect, then I think we will struggle to innovate. And so from my perspective, in terms of R&D and actual delivery and scaling, we're part way in some technologies, but actually we've focused far too much on the technology and not enough on the wider social context within which we're operating.
The city of Aberdeen is world famous for hydrocarbons, number 2 in the world after Houston. But back in 2003, the city, recognising that hydrocarbons wouldn't necessarily last forever, wanted to diversify our activities to become a true energy city and set up a very small team called AREG with the task of generating renewable energy projects, demonstration projects at the cutting edge of the new technologies, very much using the existing skills of that oil and gas supply chain which we have in Aberdeen. So we started work on the Aberdeen offshore wind farm. I hope you've heard of that project. It's a demo site for the new large turbines, 5 to 7 megawatts, that will be used in their hundreds and possibly thousands in round 3. That is our consent application sitting with the Scottish Government. We're hopeful of a positive response very soon. Last week we cleared objections from all of the statutory consultees, so that is proceeding very well. I'll mention a second project which is also very much in the demonstration mode, and it is to be a demonstrator of hydrogen infrastructure. And we have plans and been assembling the finance for the largest fleet of hydrogen buses in Europe. And both of these demonstration projects have very interesting angles on finance. They both have very large inputs from Europe. Both the offshore wind farm, 40 million euros from Europe, and in the bus case, 10 million euros. But also in that bus case, we've got a mix of private and public, similarly on the offshore wind farm. I think each case is in many ways unique, but I'd say there's 2 words that characterise that fundraising phase that you go through. I would recommend, first of all, to be innovative, and secondly, to be persistent. I'll leave it at that for the moment.
Okay. Well, Adrian asked us to avoid the word risk, but I'm afraid that's a big part of my work. Most of the projects I work on are privately financed. I think there's probably responsibilities for both the public and the private sector here. In terms of the public sector, it's reducing the risk to the private community, the equipment manufacturers, so that they want to come and install their equipment and share the risk. From the private side, the equipment manufacturers, the developers, there needs to be some willingness to show something the other way. If you're going to develop a new product and get support in Scotland, you need to show a benefit to Scotland. You need to produce some jobs. You need to have a manufacturing capability, leave some money in the country. So I think there's responsibilities on both sides. Short answer there for you.
Last but not least, Angus.
Well, I'm not a financier, but a very large number of financiers are sort of our clients, so I hopefully know a bit about what they're thinking. And it seemed to me, looking at the topic, it might be helpful to try and break down different categories of public and private interaction on finance, and see if we could sort of learn from that, and see if there were some areas where we thought there should be more effort and other areas which hadn't worked so well. So a couple of them, or maybe 3 of them, are to do with the famous Valley of Death. So you've got the problem with young startup companies. They get sort of initial VC funding perhaps, but then it's going to cost a lot more to get the product through the development phase, and marine is a classic case. I see Max Carcass over there. The devices take a long time to get to commercialization, and you inevitably run into some difficulties because the initial VC partners start to get maxed out on what they've contributed, and somebody else has to step in, and very often there's a role for the public sector. So we've seen, for instance, in the case of some of the marine companies, Scottish Enterprise has made venture capital investments, and Carbon Trust as well. And then there's government grants for R&D, similarly aimed at that kind of particular issue, and some of the wave and tidal companies have benefited from that, for R&D and for demonstration projects. And then there's direct government procurement, which sometimes comes in, maybe not so much in the UK, but the Masdar City example that we saw yesterday morning was interesting on that. And then the US Navy has been a very, very active purchaser of renewable energy, both biofuels and solar, and also 1 or 2 wave devices from Ocean Power Technologies. So that's sort of one group of involvement, if you like. But there are others. There's the public sector development banks have been very active in providing public money along with the private bank money. So everybody from the China Development Bank to KfW and the European Investment Bank and, for instance, the First Minister's new Renewable Investment Fund. And then ECA cover is very important in renewable energy. Both the Danish and the German export credit agencies have been enormously influential in recent years, and some of the really big deals in covering the risk. And then finally, there's one or two things that have been tried elsewhere, like the US had a federal loan guarantee program when they were actually taking the risk of lending to projects away from the commercial banks. And some of those projects will probably be very successful, but the program probably won't be redone because of the scandal over, I think it was the $530 million that was lent to Solyndra. So there's several different mechanisms there, and it would be interesting to hear the views of anybody here about which ones they like and which ones they'd like to see more of.
Thanks, Angus. So that was almost an open invitation to the audience. Before we open that up, could we just have a show of hands, make you do some work before the end of the day? Who's in the private sector here? Who would say they're in the private sector? And who's in the public sector here? Who doesn't know where they are? Oh, there's always one. And who's in finance? And who's in academia? And who's in the general low-carbon renewable energy industries, albeit biomass, wind, wave, tidal? And there's still a few people that don't know where they are. Okay. Does anyone want to comment on what Angus said, or anyone want to take some of these points that the individual panellists made, take it on further? Additional questions or thoughts, opinions, ideas? No? Oh, yes. No, there's a gentleman here in the...
Well, I was just, unfortunately, I'm afraid I missed some of the earlier topics, but a kind of thought on public procurement and private investment. Looking at it from a marine technologies perspective, actually, I mean, the traditional sources of finance are, for projects in any case, the utilities looking at developing these projects. But of course, the risk profile is quite high relative to some other areas, and so it's a question of where you put your capital as a utility and how you get board sign-off to putting capital into some of the projects. Now, a tariff that's attractive can help, and if there is a grant, but fundamentally you're looking at a return and you have to compare that against other benchmarks. So are there some things that can be done to help just kind of gently nudge that along a little bit? And the thing that I noticed is that recently the Scottish Government placed a contract with EDF for all of its electricity, 2.7 terawatt hours per annum, which is a fairly sizable sort of contract. It's coming up for renew in 2015, in I think 3 years' time. Maybe there's some potential there to have some elements that, in looking at where to award those contracts, it's not necessarily just on price, but incorporating some other factors in terms of meeting general, policy objectives. I don't know what the panel's views on that is, whether there's any issues around those kind of things, but in a way it's like any tender of meeting a number of criteria. Give that as a thought.
Anyone want to take that point on? Yeah, Chris?
I'll take a controversial point of support there. I also buy electricity from EDF, one of the largest nuclear suppliers. That's where most of our electricity comes from, and I purely work in renewable energy. As an individual, I'm likely to buy my electricity from the cheapest source. What is anyone else going to do? So those support mechanisms that you're talking about need to feed in and actually give a return that we wouldn't otherwise have. So why should we buy electricity from some of our homegrown generators, Scottish and Southern Energy, Scottish Power? If they haven't got the cheapest price, they've got to be offering something else. So you can, I think some of that money can kind of be recycled if you think about how it's spent. So I would tend to agree with you.
I think the general point that can you use procurement policy is to deliver more than just cheapest price. Absolutely, but clearly there is a risk premium that you've got to be aware of, and they can only go so far above the envelope before it starts to look very awkward to everyone. And the question is, how big is that? And again, that has to be set at an agreed political or whatever level that we're prepared to do that, because it meets a number of other criteria. And like most of these, there are multiple criteria. You know, if you're worried about fuel poverty, then there's an issue there in terms of price. If you're worried about security, there's, you know, so actually trying to pick those and decide which is most important is a collective decision at the government, but it is a very powerful technique. And I think the public sector are only now understanding how powerful it is by looking at particularly the retail sector and how they have driven down a whole range of topics. We're doing some work with a big global logistics company, and what they're finding is that they are wanting their suppliers to be more low carbon or renewable. Their suppliers actually are having big issues about access to capital. So actually the front company is now offering finance to their suppliers to essentially deliver more low carbon solutions, so that the suppliers can now give low carbon solutions back to the main company. And there's a really interesting dynamic going on there, so that the big company can now sell services to other companies, which they can say, look, we're green, we run electric cars, or we run whatever. So there's a really interesting dynamic going up and down the supply chain, and that's certainly something I think the public sector is starting to pick up on. Yeah.
Thoughts? Any other further comments from the audience before we move on? Yeah. Do you want to wait for the? So can you say who you are and organisation, please? Thank you.
Hello, Chris McLeod, Strathclyde University. I've just got another one about Andy actually. People are interested. You said that a lot of sort of risk is currently viewed in sort of the technological terms, but we should also look at what the social context of these are when we're creating these kind of projects, and what kind of mechanisms are in place for looking at these social contexts, and how do you necessarily share that type of risk?
How do you measure it at the moment? I think you measure it when you bump up against it, and whether you're talking about, you know, again, many people in this room will be aware on just getting away from the renewable energy. If you look at energy efficiency, you're getting to the point where the utility companies are finding that even if they're giving £100 and free insulation, people are still turning them down. We don't know, we can't be bothered with, you know. Now, when you're getting up to that sort of knockback, when you're offering something that is clearly in somebody's economic, social, whatever interest, because there are a series of non-market factors that are affecting that decision, then you have to be aware of how you can get around that. And there's a lot of work, you know, on the energy efficiency side in terms of community-based, or making sure that you're going with trusted partners to deliver the energy efficiency rather than an untrusted energy company trying to sell you energy efficiency. So there's a whole series of things you can do. Similarly, on the renewable side, we're starting to see this big kickback against onshore wind. You've had a massive kickback against biomass in cities. You've had a kickback against energy from waste pretty much anywhere. Until we start to engage much more and demonstrate the value to the community of doing this rather than it being dropped in from above, then there will be a challenge. And I think we haven't been very good at it. We're getting better. Bits of the renewable energy communities are getting better at doing that. But it's something that we're going to come up against time and time again. You know, we're talking about a radical transformation in the way in which we produce and use energy over the next 10 years. The idea that we can do that without bothering to tell anybody or mention it and just drop it in on top of them, it's just a fantasy. So that is just going to become an increasingly big issue going forward, I think. So
it strikes me when we talk about all these topics, we always talk about the risk. And one of the things that interests me is, so when we talk about R&D, I think there was a report published recently, it might have even been this week, about what the UK spends on R&D as a percentage of GDP. And the figures weren't very good. I think Japan, China and America were the top. I can't remember where we were, but we were quite a long way down. I think it was 1.7% and dropping, and we'd been down, bumping along the bottom. To increase that, public money goes in. It is public money. We say it's government money, but it's public money. And they're going to take a bigger risk as a consequence. If you ask a private investor, he'll say, yes, well, I'm taking a bigger risk, so I want a bigger rate of return, and it's quite clear. So one of the things for me is, how do you articulate the public good? Because it's the reward. What reward do you get for that bigger risk? If we're going to invest 3% of GDP, we're going to take more risk. What's the reward? And I think have you got any ideas about how? I think it's a similar way of asking the same question. How do we articulate that to allow governments to give government the push to spend more on R&D? Because those countries that do that, whether it's Korea, Japan, Look at Japan. How many billion yen going into floating wind at a drop of a hat? I mean, it's phenomenal. How do we? And they can see the benefits in the long term. So how do we get that across and get that working better in the UK? Do you think?
Could I have a go? I think maybe the answer is not where you were driving it, if you don't mind me saying so, because I think we heard yesterday from one of the panels in the afternoon, I think it was, some of the manufacturers who were with the First Minister, they were sort of unhappy about the way R&D was treated by the tax system and how difficult it was to actually reclaim stuff when it had already been spent. And I think one thing you can say about Japan is that they do have a sort of advantageous coverage of R&D by the tax system. So it makes sense for them to spend a lot of money on R&D, and actually quite a lot of that spending is probably wasteful because it's so tax efficient that they do it, and it doesn't have the same constraints as if it was less tax efficient. But I think there's more that we can do as a country to encourage companies to spend money on R&D just through the way it's treated in the tax system.
But is there an issue also with what's the term, patient capital, in the sense that if you go to particularly Germany, and in fact Jim McColl mentioned this yesterday in the talk, that he was quite happy not to make any money for one of his companies for a few years because he could see the big prize. But that's not actually a typical view. The typical view is you have to, on your quarterly return, you have to demonstrate to your shareholders that you're doing a good job. Is that an issue that is affecting the UK's ability to invest for the longer term, which you don't see in parts of Germany, for example?
Yes, I think it is. I mean, Germany's got the famous Mittelstand, real sort of powerhouse of privately owned businesses that dominate the manufacturing sector, and even the large quoted manufacturing companies, they don't get pushed around in terms of short-term shareholder considerations in quite the same way as UK-listed companies do. So I think that's a long-lasting problem that we've failed to deal with up to now.
Any more comments on that theme from the audience? Keen to hear views and opinions. We're not the only experts in the room.
Well, right. I would just echo that. I mean, the two. Sorry. You're absolutely right. It was 1.7% was UK share of R&D, and China's just overtaken us. The States, Germany, and Japan were all just about under 3%. And France was 2.2%. So, and absolutely, I mean, having seen and lived and breathed the sort of VC investment sort of side, I think there is a structural issue of sort of too short-termism in terms of quarter to quarter, and that's why the kind of simplest thing to do when you privatise an electricity company is just cut the R&D, because it makes an immediate benefit for the next quarter and the quarter after that. Whereas the Mittelstand, privately owned, family-owned companies can take a view that's the next 3 years because they don't have that pressure on them. So I think that's a real issue to try and solve how we get long capital into things rather than short-term capital.
Okay, so moving slightly sideways and in keeping with where we are, I'd like to ask the panel, what advantages do you think Scotland can bring to this specifically in terms of its vision for what it wants to achieve? It's not going to do that without the innovation, without the research, without the test and demonstration. What is it that Scotland can do in this space? Because it's set itself out a huge vision. It's got to have a way of doing it, and it could lead the way in this. Any ideas about how Scotland can make a real difference in this area?
There's political leadership, of course, which the Scottish Government has already shown. David Cameron said yesterday in his conference speech, the UK will rule the waves. I vaguely recall the First Minister saying Scotland rules the waves about 12 months ago or even earlier. And of course the concrete initiative that the Scottish Government took was to take a decision on the rocks for marine energy, which the UK Government then copied. Yeah? Scotland clearly has its natural advantages, notably in all forms of marine and offshore energy, has good universities, good skilled workforce, and a determination and a political realisation that this is the fastest growing sector of the global economy, and it's where Scotland can carve out a very successful niche for itself. You asked the question a few moments ago, why should any government want to invest in R&D? What's the reward going to be for them? Well, the reward is going to be exports and market share globally of the world's fastest growing sector.
I mean, I picked two points. One of which is within the university sector is the joined upness of what's going on. So in the university sector, you've got, and I'm thinking about the technology side here. You have got all the key universities joined up together in a partnership where all the testing facilities are openly available, and you know what you can get and where you can get it. And if we don't have the scale, then we know you can go to NARIC or whatever. In other words, there's a very clear framework all the way up to EMEC and beyond, so that right the way from your wave tanks at a very small scale all the way up to full scale model testing, you have that ability to join up the research and the university talent with the companies trying to try things out. We're starting to see it with other initiatives. We're involved with getting involved with the Cities Alliance, looking at how you can use the cities as test beds for intelligent mobility, so smart city solutions. And again, it's very much about making sure the cities are sharing knowledge and understanding what's going on. So that type of joined upness is not something I've come across in many other countries. It certainly doesn't happen in England. So
I would certainly go with Giles's point that what I would hope to see on offshore wind is exactly what happened with oil and gas. The first movers who learn their trade in the North Sea, and this is why the whole world is watching what happens in the North Sea on offshore wind, will go on to sell that expertise around the world. Every country with a coastline will be interested in offshore wind. We tend to find cities on those coastlines. They're a great market for power. You put the wind generation in the sea next to them.
I'd raise two very different points. One is probably about education and expertise. There's a very rich engineering heritage in Scotland. It's being exploited by some of our universities to turn out some good graduates in renewable energy degrees. Currently SCER has, I think we've 120 people in Glasgow, and we've around 15 jobs up for grabs at the moment. It's still a struggle actually to recruit the right people. The other point's quite different. It's about the wind resource. We've got just about the best wind resource in Europe, in Scotland. It's a great place to test your turbines, if we're just talking about wind energy. They also do a lot of work in solar energy. It's not ideal for testing solar panels.
Any thoughts from the audience again on this one? What makes Scotland a good place for getting that risk balance between public and private? A good. Why is it better here than anywhere else? Why could it be better here than anywhere else? Any thoughts? If not, we will move on. I realise it's late. So let's move on. So I think one of the issues for me, particularly in the nascent industries that I'm involved in, and I suspect you mentioned hydrogen buses, is the issue of, and again, this risk and reward, taking the risk, putting in a lot of money, and then certainly from an IP point of view, wanting to retain that, and yet the industry needs that data urgently to progress, and particularly over the timescales. If you've got a long time to do this, it can filter out, it can come out slowly, firms grow slowly, but when we're trying to accelerate these huge programs, data sharing from T&D is really important, and yet people are investing a lot of money. Why should I share? How do we get the learnings? How do we get the data sharing out of this? And is that another part of this risk reward in terms of public investment, the public good? If we're going to put money into these things, we expect companies to share their data more widely.
For the Aberdeen offshore wind farm, we've interviewed over a dozen turbine manufacturers from across the world. There's been huge interest because there is a shortage of offshore wind demonstration sites around the world. And to each one, we have asked the question, how open are you willing to be with data? Now, we do recognise that some data will always be commercially confidential, but on a spectrum of openness, we're encouraging people to be open, to work with universities on bringing out the learnings of that data. So it's back to the point about procurement. Can you have multiple objectives on procurement? You can use procurement processes to do more than to achieve other objectives, such as openness with data.
And I think the other way is just to note, as has been said, is that the market opportunity is huge, and no one company is going to grab the entire market opportunity. So actually what you're saying is let's collaborate to the point at which we can actually access that market opportunity. And so a lot of particularly the nascent technologies, and I'm no less about the marine side, but certainly on the informatics and the smart cities and smart systems, the answer is you've got you've got your IBMs, your Microsofts or whatever, and they've developed their city solutions, but actually most cities don't want to be tied into a single solution. What they'd like to do is to be able to test it, and they want to test it and compare it against others, and actually trying to create these test beds, whether it's on offshore or on a whole series of other areas, is something that Scotland can do because we're small enough and nimble enough to set these things up. But that means sharing knowledge about what works and what doesn't work. And that has to be done before you can access the bigger global market that is the big win going forward. Now, that's not always easy with IP and companies, but it's an important element, I think, of going forward. So.
Giles, you want to say anything from an OEM point of view?
Yes. My company invests around 700 million euros every year in R&D, and we invest those huge amounts because the global intellectual property protection regime gives us a certainty that we'll get a return on investment from those major investments that we make. Now, when we take part in a publicly funded pilot project or demonstration project, we fully recognise that because it is publicly funded, there are public goods that are going to come out of that project, public goods that should be shared widely. And the general approach we take to this is, for a demonstration project, we will bring to it a black box of technology, call it background IP, that is the result of the Alstom investments that we have already made. We bring the black box to the demonstration project that then has the public funding put into it. And we turn on the switches and operate the black box. And as a result of that publicly funded effort here, there is lots of operational and process data that comes out. What happens if you put the pressure up or down 1 bar? What happens if you raise or lower the temperature? That sort of operational and process data that is the result of publicly funded demonstration effort, should be shared. But the background IP that's in that black box that we bring to the project, if we're asked to share that, then we will stop investing in the R&D that leads to the creation of that black box technology.
That's fair enough, but I think it was Martin McAdam of Aquamarine yesterday was making a really good point, which was that in the tidal sector they were competing like mad against each other, and they were telling each other they were actually much cheaper than they actually were, and the result was actually they ended up with a rock banding which didn't actually pay for their, so in that sense it actually destroyed their own the way they'd set it out, destroyed their own opportunity going forward, and it's only now that they're starting to catch up. So this notion that there are elements that have to be open, and you have to be open about it. I fully accept the point about background IP. You're not opening up everything, but you do need to be honest about what works and what doesn't. Otherwise, it will come back and bite you on the bum.
And technology companies should be honest as they can be about costs of technology. There's a question earlier about government support, financial support, and the importance of providing certainty to investors. We always say to governments, look, don't adjust your feed-in tariff or your certificate scheme every year. Give us some certainty. Governments often say back to us, well, we tried to give some certainty, but then suddenly your costs came down, like for PV panels, and we've had an explosion in investments in PV, which we didn't want, and it's costing us far too much money. To which we then say to the governments concerned, well, look, taper your support scheme, your feed-in tariff, whatever it is, so that it comes down over time, exactly in accordance with the progress that the technologies are making down the cost curve, which requires greater openness from the technology companies about that progress down the cost curve and their forecasts for the sort of progress they're going to make. We published a major study last year on the costs of CCS, not just today, but looking forward to 2015, 2020, and up to 2030. for the 3 different CO2 capture technologies that we provide. And governments have welcomed that as a tool that informs their policy making on support for CCS.
I think governments have learned that lesson very largely, and they are now using much more sophisticated mechanisms for altering the support depending on what the underlying technology prices are. So that is good. But I think maybe there's a bigger question which we could put to a vote if the chairman thinks it's a good idea, and that is whether people think governments are doing enough in terms of actually providing money or covering risk for the private sector, or whether they should be doing more.
Good idea. You haven't put your hands up in a long time. Did you all get the question? So, what was it? What is it? What are they raising their hands for? Are they doing enough?
Yeah.
So, hands up, those people that believe government is doing enough. So, you all think government needs to do more.
So that begs the question: is what should government be doing more?
Can we separate out the financing from the funding from the financing, because there is a bit of a difference. Funding is the early stage, getting it through to something deployable. Financing is actually how you might scale it. So they are actually 2 very separate elements, and arguably you're not doing enough on either. But there are 2 separate issues, which is the early R&D and development, and then the which is your hydrogen buses, for example, or the marine technologies, whereas an awful lot of things actually are financeable if you can just tweak the system a bit, which is, it might be worth just separating those 2 out.
So I think we're going to get the same result, but we'll take 2 on that snap poll from the audience. So the first one is on funding of early stage R&D. Is the government doing enough on early stage funding of R&D? It's the same answer for financing, I think. That government should be doing more.
By that, everybody's too tired to move their muscles. But,
So on the question of data sharing, just one final thing. There were a few people who put their hands up acknowledging that they had something to do with finance. Now, one of the issues is this bankability issue. Do the finances in the room here feel that data sharing is good enough, or that there needs to be more? I can't remember putting your hand up, so I can't point to you. Oh yes, look, there's a young lady who's prepared to answer.
Yes, with a bit of experience, both private and public sector. I think it reflects back on a comment that was made yesterday, and I think it was Jeremy Biggs from Narek Capital who alluded to that fact. I think, and again, it comes back to the honesty and the openness and the accuracy of the estimates of costs. Because the earlier you can have those discussions with the finance community, the earlier they can factor in those costs and build that into a realistic model. Again, we're not setting false expectations. We're allowing more openness and honesty about the actual realism of what level of support is needed and what cost that support needs to have behind it. And I think we just genuinely move all of these projects forward in a bit more speedy manner. And avoid those situations where the costs are wholly underestimated to begin with, either through lack of knowledge and real understanding of the product or the technology risk, or through this belief that, well, if we under-egg it, then we'll get more investment, that just leads to market failure and even more reluctance, shall we say, for the finance industry to invest.
Thank you for that. So I'm conscious of time, and this is the last session before that gets wrapped up, and I've monopolised the questions. So come on, audience. What haven't we covered that you would like the panel to address on this issue? Lady in the middle.
Hello, my name is Marcy Campbell. I'm Director of various financial services companies. I'm not sure that you've actually answered the question, other than to say that the public sector should do the upfront grant giving, and that then the private sector can come in for commercialisation. Is there any sort of blending of these 2 things that can be done, or does anyone have any other ideas? I thought we were quite light on the actual answers to the question.
Well put.
I'd like to come back on that one, please, Adrian. I'm glad you asked that, because we have a very interesting situation in the UK at the moment on the offshore wind demo sites, which I mentioned. We have two large sites at the moment, our site in Aberdeen and the NAREC site in the north of England. And the financing model for the two is completely different. Ours is a private sector company with an injection of European money to pay for the extra cost, but it's very much a private sector wind development. The NAREC site is publicly funded. It looks much more like national infrastructure, just completely different. Now, what's going to happen is that when both these sites are filled, that we will need more test sites. We will need test sites for floating turbines. We will need test sites in deeper water. And so the kind of question for Crown Estate, and they're doing a consultation on this as we speak, is, how should we organise for future test sites? I don't think there's a clear distinction between the two we have as to which was better. I mean, they've both taken a long time to develop, and there are kind of pros and cons for both. And I'm with you, maybe we can take the best from both and in some way have a hybrid way of developing future test sites. Maybe that's motherhood and apple pie, but if we could use the best from both systems and have a hybrid way of running further test sites, it would be good.
I mean, I would come back to my first point, which is that this notion that you're working your way through technology readiness levels, you get to a point where the government can stop funding and commercial financiers come in and solve it all. It doesn't exist. The issue then is, what does the public sector need to do to help the financiers have a level of assurance that when they're investing, they're going to get their return. And that might be everything from making sure that regulations are aligned, making sure that planning's simplified, making sure that the test bed sites all the way through, from very early stage all the way through, are there and available. That takes a huge amount of background work within the public sector, but is certainly deliverable and actually gives a lot more assurance. And I think if you look at Scotland, one of the things it has done over the last 10 years is start to do that in the renewables space. It's got a long way to go in some of the other sectors, but it does have that type of assurance underpinning what is going on. So I think the answer is no, it's not a matter of saying, publicly you fund up to a point and then commercially you get on with it. You actually have to underpin the future things, whether it's with incentive schemes, whether it's with ensuring planning's sorted, whether it's ensuring that environmental impact assessments are not going to throw you. There's a whole range of topics which actually just help to smooth the path to make sure that the return that the financier thinks they're going to get does actually come through.
I'm going to put myself at a risk of being completely isolated in this room, but I actually think the government's probably doing about the right amount, because it is helping quite a bit on the demonstration projects. It is through its various agencies. There is the occasional VC deal and so on. There is some public procurement going on, but I don't think it's not extending itself or trying to pick winners and therefore creating the risk that there's going to be a cylinder type situation and a big scandal that sort of damages the whole industry. I think what the government really has to do more of, rather than getting involved in actual investing, is get the policy regime obviously right, make sure that the tax regime is right, and also consider making more money available for the development banks. So the EIB could lend more if European governments got together and extended its capital base and so on. Obviously, the Green Investment Bank can lend more if the government gives it the right powers to borrow. So I think government's probably doing about the right thing on those direct risk-sharing things.
Okay, I'm going to, as you can hear from the clapping next door, we're now late. So I'm going to draw this session to a close. I hope that at least partly answered your very good question at the end there. Can I ask you to give a big round of applause to our panel here, and thank you all for your attendance.